This is the Scrap Metal and Commodities Recycling Report by BENLEE and Raleigh Goldsboro Recycling, October 10th, 2016. Last week, many commodity prices fell, yet many economic reports were mostly positive. U.S. steel production slightly rose, but after falling for 4 months, production remains near 8-month lows. Oil prices rose 3% for the week, ending at $50 a barrel, up a big 3% for the week and up a bigger 9% for the past month. At prices over $50 a barrel, many U.S. drillers are nicely profitable, so more rigs will be coming online, which will help stabilize oil prices. Remember, prices were about $27 a barrel a short 9 months ago. Higher oil prices are helping the U.S. oil rig count to continue its slow creep back up, which remains a major positive for jobs. It'll also help stabilize steel prices due to the huge amounts of steel used in these rigs. Iron ore fell to $54 a metric ton on Thursday, making it down 1% for the week and down 7% for the month. Low iron ore prices help higher steel mill profits, but could bring some lower steel prices. Low iron ore also brings low scrap prices, as iron ore is used to make scrap metal substitutes. Scrap steel fell about $20 a gross ton in most regions last week, which is about 89 cents per 100 pounds and $18 a net ton, bringing it back to the low levels of last April, 6 months ago. Hot rolled coil steel prices were steady at the recent low of $584 a metric ton, but there was an announcement on Friday that further declines are coming. Stainless 304 scrap prices dropped to 32.5 cents per pound as demand has dropped in some markets. Copper fell a big 5 cents for the week, ending at $2.16 a pound as the dollar strengthened combined with no major demand factors. And when looking at the 1-year copper price chart, we see copper remains down as the global economy remains in its very slow growth mode. Also, copper inventories are near 1-year highs, so there is no reason to expect any increases in copper prices. Aluminum was about flat for the week, ending at 75.6 cents per pound. But unlike copper, aluminum prices are near 1-year highs. And the 5-year aluminum inventory chart shows inventories are near new about 7-year lows, which should ensure prices remain somewhat stable going forward. U.S. vehicle sales rose to an annualized rate of 17.8 million in September from August's 17.0 million. Year-to-date sales are a bit below last year, but considering this rate is almost double the low of February 2009 of 9 million, it's a great number. The U.S. Institute of Supplier Management Index for Manufacturing, a major indicator of manufacturing levels, rose to 51.5 in September from August's 49.4, which was well above market expectations of 50.3. New orders and a rebound in production were the key reasons for the increase. Non-farm U.S. payrolls rose by 156,000 in September. Not a great month, but the good news was the growth was in high-wage management and technical consulting jobs. Related manufacturing and mining jobs were steady, which is part of helping maintain stable commodity prices. U.S. initial jobless claims fell to a new low since last April, and the 4-week average, which is 253,500, is the lowest level since 1973, 43 years ago, which is a major positive for the economy. Unemployment percent rose a bit in September to 5.0 from August's 4.9, which sounds a bit bad, but that's not the whole story. People that had left the workforce in recent years due to a lack of good jobs are now returning, so what is called the labor force participation rate is close to the highest level it's been in 2.5 years. Better jobs are bringing people back into the workforce. Very good economic news, and news that will help stabilize commodity prices. With that, we hope all have a safe and profitable week.